Palantir just surged 80% off its April low, and now it's within striking distance of its all-time high. But this isn't just a relief rally. A run to $200 is a very real possibility, and it could be a lucrative opportunity for investors right now. I'm going to show you exactly why. Now, while most of the internet was busy mourning the so-called death of AI, Palantir was out there signing defense deals, adding billions in market cap, and quietly positioning itself at the heart of NATO's AI strategy. And here's what most people missed. One fast-tracked contract may be the key to understanding everything behind this rally. We'll get into that in a second. If this 80% move caught you by surprise, let's fix that. The market doesn't reward guesses, it rewards systems. That's why I created the free stock market blueprint. It shows you exactly how we catch these kind of moves before they go mainstream. The link's below. Grab it and keep watching, as we're about to break down exactly what just happened with Palantir and what might come next. Now, while influencers were eulogizing AI, Palantir was landing new defense contracts. Since April, the stock has exploded up 80% and it's now within striking distance of its February high. But zoom out and the move is even more impressive, 180% since it broke out of a 4-year consolidation back in November. Now, that shouldn't be taken as hype. It's more of a coiled spring finally snapping loose if you understand how to read market structure. Wall Street also noticed this. Palantir is now worth nearly $280 billion, rubbing shoulders in the Nasdaq 100 with the big tech elites. This is no longer a fringe stock. It's being taken very seriously. So what's driving this new wave of bullish momentum? Let's talk about the real catalyst. And no, it's not a social media trend or an Elon tweet. After Trump dropped AI-related tariffs on China, panic hit the tech space. Some called it the end of the AI run. But Palantir, they went the opposite way. They doubled down. One of those big moves, a massive contract with NATO. NATO signs fast-tracked AI battlefield deal with Palantir. That was the headline. But here's what it really means. NATO is adopting Palantir's Maven smart system to modernize battlefield decision-making across 32 countries. It was signed, sealed, and set to deploy in just 30 days, making it one of the fastest defense contract approvals in NATO's history. This puts Palantir at the center of AI-driven military infrastructure, something that doesn't just drive revenue, but influence. Strategic, long-term geopolitical level influence. And that's not the only reason the stock is climbing. In Q1, Palantir's total revenue grew 36% year over year. US revenue up 52%, and they're forecasting 31% full year growth in 2025. Those are real numbers. No AI washed fluff, no vague future promises, just clean growth. But here's where the rubber really meets the road. According to analysts, for Palantir to actually justify a $200 share price, it would need to grow 50% annually for the next 4 years and trade at 18 times its 2028 revenue. That's a steep hill, but one thing I've learned is to ignore what analysts say and focus on the stock price. So yes, $200 is possible, but it's not going to be a straight line. It's a knife's edge between exponential growth and exponential expectations. And that brings us to the gray area, the part that no one really wants to talk about. Palantir doesn't sell iPhones or self-driving cars. It sells intelligence, surveillance, and battlefield decision software. They've worked with ICE, they've provided data tools to US border enforcement, and that makes people uncomfortable. To some, they're the vanguard of national security. To others, they're Big Brother with better branding. The ethical divide, it's baked into the stock. And then of course, there's Alex Karp, Palantir's CEO, half philosopher, half Bond villain, full wild card. He's the kind of guy who quotes Nietzsche in earnings calls and somehow makes it sound strategic. Whether you love him or hate him, one thing's clear. Karp is building Palantir to dominate and not to be liked. And speaking of domination, let's compare Palantir to its bigger, cleaner sibling, Nvidia. Nvidia's push towards $200 is like a high-speed train, smooth, powerful, controlled. You can trace the trend lines with a ruler. Palantir, on the other hand, is a jet ski on Red Bull, flashy, fast, and occasionally crashing into a peer. This stock has dropped 26% from March to April 2024, 27% in the summer of 2024, 25% again in January this year, and just recently, the 47% swing from its all-time high to the low of April, spurred on by Trump's tariff news. This isn't a smooth trend, it's a battlefield, fitting given who they work with. And a big reason for those wild swings, the fan base. Palantir has become a cult stock. It's got the retail hype of a meme stock, the defense contracts of a government contractor, and the volatility of a caffeine-addicted squirrel. But here's the thing, all of this still points in one direction. If Palantir breaks its all-time high before earnings, and earnings confirms the momentum, the path to $200 opens wide. But if it fumbles, expect a sharp pullback or a fake out rally. You've seen how fast this stock moves. Me, I don't marry stocks. I date trends, and Palantir, let's just say she's showing up in a red dress right now. Now, staying objective, we can recognize that Palantir's 80% surge wasn't luck or hype. It was the result of a company aligning itself with massive long-term defense and AI trends before the rest of the market caught on. But here's the hard truth. Spotting opportunities like this in real time is almost impossible without a system, because the market doesn't care about your gut feeling. It rewards clarity, discipline, and timing. If you want to catch the next Palantir before the headlines and avoid getting stuck in the hype cycle, you need more than tips and tweets. You need a repeatable strategy that actually works. That's exactly what I share in the video on how I trained over 1,000 investors and the real reasons they couldn't make money before they learned how to do this right.